Oh, snap. The IPO of Snap up on the second day of trading, and now shareholders hoping the amazing debut doesn't vanish. Now, it's too early to tell where the company and the stock might be a year from now, but there are cautionary tales from hot IPOs worth revisiting. First, theglobe.com. This is amazing, right? It saw a couple of college undergrads take the concept of chat rooms public, and it set the world on fire. November 13th, 1998, the Globe prices its initial public offering at only $9 a share. It begins trading. It rallies all the way up to 97. It finally settled in at $63 for a one-day record gain of 606%. In many ways, this took the tech IPO market into overdrive. In fact, it got every American thinking that they would just play the market and retire maybe at age 40. One of the founders, by the way, was known for hitting the town in leather pants, and he had a model girlfriend. It's not known exactly whatever happened to the pants or the girl, as the stock proceeded to eventually work down to just 10 cents a share. Now, if the Globe took the tech bubble into overdrive, it was the world online that erected a brick wall. Now, this was a Dutch tech company. It was billed as the America Online for Europe and Africa. And I got to tell you, it was successful. Subscriber growth was growing, but there was the issue of profits. But that's not where the death blow came from. You see, Goldman was the lead underwriter, and the IPO party was graced by Sarah, the Duchess of York, Christopher Reeves, Joe Cocker. What could go wrong? Heck, it was a party that day, March 17, 2000. The stock oversubscribed 21 times. When trading began, the shares skyrocketed. But it was interesting because by the closing bell, they were trading unchanged. It was 43 euros. That's where it started. It still had a 12 billion euro valuation. Now, in the midst of the party, someone asked the CEO, Nina Brink, what she thought of all the action and what she was going to do with her newfound wealth. And then she admitted she had already sold her entire stake privately. 10% of the entire company was sold for only 6 euros. Well, needless to say that the stock began going into free fall for a whole week. And then a week later, the S&P 500 hit an all-time high, and it began to implode. Now, I say it was a sobering wake-up call that everyone had probably figured, we've been snookered. This whole thing is a mirage. Game over. And I'm not here to say that Snap Inc. is either the Globe or World Online, but now all the unicorns are going to come public, and some of them will be dogs looking for suckers to finish what they call the greater fool theory. So I'm just saying, be careful. In the meantime, Janet spoke today, Janet Yellen that is, and, well, she gave mixed signals, leaving a March rate hike open, but stressing that a certain amount of prudence would cap Fed interest rates to just 3 for the year. So I think Wall Street figured they could live with that. Although I do think the Fed needs a robust jobs report next Friday to be perceived, so they won't be perceived as getting ahead of themselves and being overzealous and stopping an economy that really, to be quite frank with you, is only just now getting out of the starter's gate. Consequently, the major indices finished the session higher. Also, a vote of confidence for this market that still believes the White House agenda will get through, even with the occasional distractions. And again, that's a great sign going into next week. By the way, speaking of rich people spending money, well, that's because they think taxes are going to go lower. And, well, they also are making more money. So I'm working on a special report. I'm going to have 3 stocks for you to own because the real wealth effect is going into effect. Go to my site, wstreet.com, for a copy of that and my daily market commentary.